Alan is ready, and then just clip the stream accordingly. I've left golden mics to have mic access. If you feel super passionate about anything said, you know, come in. Bitcoin may explode to the upside. Keep euphoria to yourself off the stream, maybe. Just gonna check the stream.
Floor, I'm around whenever you're ready to start.
Just checking the stream. So, is it your last day at Blockstream, Alan?
Oh, I've been here a year and a day.
All right. Must have been a different Alan.
Yeah, there's Christopher Allen who used to work at Blockstream. There's another Allen too, but he goes by a different name.
All right. Okay, let me just pull out some notes. Okay. One more second. Okay, I'm ready to start. Are you ready, Alan?
As ready as I'll be.
Okay, welcome everybody to WhalePool TeamSpeak. We're here today with Alan from Blockstream. Alan, if you'd like to introduce yourself.
Yeah, my name is Alan Piscitello. I'm the Director of Product at Blockstream. I've been at Blockstream just over a year. I've been focused primarily on Liquid. So Liquid is the sidechain of Liquid we have that's run for inter-exchange settlement and asset issuance. I've been a long-time Bitcoiner, been around for quite a while as well. So going back many years, so I'm familiar with the ecosystem and the community. So glad to be here and glad to talk about Liquid.
Cool. Well, it's good to have a fellow OG in here, and thank you for taking the time to come on. So, if you'd like to give us the Eli 5 TLDR on Liquid, I'm just thinking somebody who doesn't know anything about Liquid, you know, how can we summarize it and get what it is out there?
Yeah, so Liquid is a separate blockchain than Bitcoin, but it uses Bitcoin as a native currency, and it has different features than Bitcoin. So the features that you see that are different than Bitcoin is you'd have 1-minute blocks, and you have a feature called confidential transactions. So that allows people to send money very quickly, and it allows them to do it confidentially, where you don't necessarily know the amount of the transaction for third parties. So a lot of times there's tools that are looking at exchanges, seeing when you deposit a big amount of money on Bitfinex, everyone knows about that, and it's becomes news, and people are able to trade before you even have your account settled. Liquid also has a feature called issued assets. So what that does is it allows members of the Liquid network to create tokens that can be used for any purpose. So this is very similar to things like ERC20 or OmniLayer, where you have different tokens. A big difference here is these tokens are actually native to the blockchain itself. So this means when you construct a transaction, everyone who has a full node is actually validating these. So the way you see Liquid show up, it's actually not run by Blockstream. We provide the code and the technology for it, but it's run by a group of member exchanges, financial institutions, banks, and trading traders as well that are running this network so that they can send money quickly between each other, and so that they could send money on behalf of their customers to each other. So that's the quick explanation of Liquid. It's going to allow people to send money fast and reliably with a different trust model than Bitcoin.
Well, that's cool. I mean, I've been waiting for this for a long time myself. I remember the original Blockstream image of the the circle with Bitcoin and the side chain, and securitization of assets and stuff. Great thing that I've been waiting for a long time, but I was expecting it to be more trustless, not trusted. And we had Paul on here, Truthcoin, talking about his drivetrain model. There's obviously been a lot of criticism so far online, maybe rightly or wrongly, and I suppose that's what you can help clarify with regards to the trusted model of Liquid. I mean, what can you say about this?
Yeah, absolutely. I mean, that's something definitely that I can understand why people are concerned, and there is a it's why people are talking about that. Really, there's going to be different trade-offs for different use cases where different levels of trust work. So the use cases that Liquid is focused on are use cases where you're already using a trusted party. So when a trader is trading on an exchange, they're leaving funds on this exchange anyway. They are trusting that exchange not to just steal the Bitcoin, not to get hacked. And as anyone who's been around a while knows that doesn't always work very well for them, right? So you have some level of trust there already. What Liquid does is it moves that level of trust to instead be a single party, to be the entire federation, where 2/3 of them now need to be compromised or act maliciously before anyone can actually steal the funds. So the part of the question too is, why is it a federation? Why is this model? The use case Liquid is trying to solve is one of the unpredictability of settlements on Bitcoin. And really any trustless system is going to require unpredictability, and that's done through mining, right? So mining always is going to have some variance in block times. You can maybe make the block times really small, but that's going to mean, there just could be even bigger reorganizations. So you're never going to solve, reliable 1 minute on the minute blocks with a mining trustless solution. It's just not possible. So, we view Liquid as a solution for cases where you would have custodianship anyways, and making it more secure by having more parties involved in this transfer and securing of the underlying assets. And that gives you that reliability. And again, it's a trade-off. So that's what, would I lock up my life savings on Liquid? Probably not. But if I'm trading on an exchange anyway, I'd be perfectly happy to have those funds part of the Liquid network. If the alternative is, I would keep them on an exchange. So, I'd rather, in this case, when I'm done trading for the day and I'm going to sleep, I don't have to leave my funds on the exchange. I can cash them out into my wallet and have Liquid Bitcoin now secured by all of the members of the exchange rather than a single member of the exchange. But then when I wake up in the morning, I don't have to wait, 2 or 3 hours for enough confirmations to trade. I can do it in 2 minutes. So that's kind of the model there. I think the idea of a trustless sidechain, we're still very interested in this. It's a very hard problem. I've talked to Paul. I think what he's doing is interesting. I had a lot of concerns when I didn't understand it, and Paul spent a lot of time talking to me about it, and I'm really grateful he did. It still is a different security model. In this case, you're trusting a group of custodians that you already are trusting, people you're already leaving money with. In something like a drive chain, you would be trusting that the majority of the miners are not going to just take the coins, or that, if they do try that the community would be strong enough to stand up against that. So it's a different security model. I don't know, it's not like you can say one is better or worse. They're just different, and they serve different use cases better.
Yeah, I mean, I thought Paul's comment with regards to users to stop the stealing of funds, users clicking a button saying UASF, I did think that was pretty lame, but maybe I don't understand it properly. But I have heard about these 23 geographically dispersed, quote, functionaries who lease hardware from Blockstream to run nodes to do the block signing and monitoring of the network for validity.
Yeah, so that's exactly right. So there are members of the network, and not all of the 23 are functionaries. Some of them didn't, want to actually have that, infrastructure as part of their thing. They maybe weren't well suited for it. But there's a subset of them that are running functionaries. They're spread across 9 countries on 4 continents. These are companies that are already doing secure infrastructure of storing Bitcoin keys anyway. So yeah, part of the Liquid project was we designed hardware. So part of it is stock commercial servers, and the other part of it is a custom key module that we have. So that key module is the part that knows how to sign blocks for Liquid. It knows how to secure the Bitcoin. So the key module isn't just doing blind signing. It's making sure that a couple of assumptions are made. One is that the chain is not going to ever reverse a block that has a confirmation on top of it. So that's one of the assumptions that it's going to make, and it will never sign that otherwise. The second is that it's making sure that the Bitcoins that are spent and held by the network are only going back to itself or one of the members. So that can be done in a very private way where users can prove they are one of those members, but they don't have to necessarily reveal who they are. So you don't have to worry about collusion of the Federation against other members. So this is something that in terms of pegging out Bitcoin will be limited to the members of the network, at least in this version of Liquid.
I mean, what you describe about these kind of 23 dispersed who lease the hardware from Blockstream, the 15 who verify the block that come in every minute. I mean, it sounds kind of like what we were trying to get away from. I mean, this sounds almost like a banking cartel with shared database access, almost Ripple-esque. Yeah, it's a common criticism, and it sounds like that.
I'm not an expert on Ripple, so I'm not going to speak to exactly how Ripple works. The idea here is you have a group of people that are doing business with each other in some way or share a common set of customers. They're already, interacting in a certain way. Many of them are already doing business transferring between each other. And this is just providing them with a different way, with different security properties to continue doing business. And really, this doesn't affect Bitcoin at the base level. Bitcoin at the base level still remains trustless. It remains decentralized. And centralized or semi-centralized or distributed systems will be built on top of Bitcoin as is. Every exchange that exists out there today that's a major exchange is acting as a central authority in this. So comparing it to that, Liquid really is a step towards more decentralization away from that, because that's the use case it's trying to solve. Liquid's not trying to become a payment layer for all of the world's transactions on Bitcoin, and you have to go through these functionaries to use it. It's really only in this trusted set when you're already trusting at least a couple people in this set.
Okay, well, obviously, I mean, some people will see my tweets about, Bcash supporter or Bitcoin supporter, whatever. But, this sounds a little bit to me like the concerns Bcash has had with regards to, quote, Blockstream takeover, all that stuff. It sounds like, intentionally small blocks kept this way. It's okay because with Blockstream, you can trust us. Oh, by the way, 12 months later, we're releasing this trusted one where people can transact, quickly, freely, cheaply. So,
I wouldn't say cheaply. The transaction fees in Liquid will be a bit higher than Bitcoin, even without capacity, just because they have confidential transactions or bigger transactions. So it's really not intended to change that. I want to take issue with one thing you did say is that Blockstream has any influence on the block size. As we saw last year, two major efforts to, one to increase the block size through SegWit, and one to that actually did get pushed through against many developers, including a couple that worked at Blockstream that fought very hard against it with UASF. That happened last year, and then we had No 2x last year. So in that case, there were a bunch of people that tried to push a change through, and Bitcoin at this point, no party really is strong enough to make these kind of changes. So whether or not someone wants a block size increase or not, it's very hard to get the type of support to do that. And Blockstream certainly doesn't have any of that control. If they would have had that power, SegWit would have been activated a lot earlier. That actually caused a lot of work for us on Liquid. So really, I don't think that's a fair assessment to say that Blockstream really has any power. We really have at this point one developer working on Bitcoin full time. A couple people here and there will contribute to Bitcoin on their own time, but that's really it.
I mean, I don't personally believe that. I'm just reciting the story. But let's say, for example, Bitcoin, sovereign wealth, my money, I control the keys. Okay, so I convert my Bitcoin to some LBTC, and we're all familiar with the chain analysis going on with Bitcoin. Let's say that you want to transact, and some government says, "Oh, we believe that this Bitcoin is a stolen coin, Finex coins or something, that's been converted to LBTC for use in some confidential transaction to mix it or whatever." I don't know. But let's just say that there's some kind of pressure to stop payment or seize that LBTC. Given that we're talking about 15 people here, to what degree is that LBTC seizable or censorable, if you would like?
I'd say it's considerably less seizable than Bitcoin kept on a single exchange. So let's just say, let's just use Bitfinex as an example. Let's just say they angered a government regulator who seized control of their assets and had all of their Bitcoin. That's something that is a threat out there to every exchange out there, that the government could come, and it would really only take a single jurisdiction at that point to make that difference. With Liquid, we intentionally moved the members of the network. Well, we didn't move them, but we selected members for the network such that they wouldn't have any, more than a couple in any geographic, any political, jurisdiction or any geographic region. So you got the countries that have the most functionaries. The most is 3. So it's a small portion. It would take multiple nations being able to work together to just stop the Liquid network, and it would take over two thirds of them to be able to seize any of that money. So that's a pretty significant number. That's it's a very high number. And compared, again, the use case is really comparing this as money that I would otherwise be putting on an exchange to trade with, where it's in a single party that, some rogue employee gets it, or a government shuts it down, or some hacker gets into it. It's I would say more decentralized than that model. But again, definitely, I'm not going to keep my life savings in Liquid. I'm not going to, it's dependent on this federation. I'm only going to keep the money in it that I would otherwise be trading with.
Okay, I'm with you. I hear also that there's a pack list, which is a white list of acceptable addresses which Liquid can peg out to. And this is only addable by the functionaries.
Yeah, that's correct. So this is something that's definitely not necessarily well known out there. The security model of Liquid is that these functionaries are there's a very powerful server that's able to monitor the blockchains. That's connected to the internet through Tor, but it's on commodity hardware. There's a lot of attack vectors on these. There's vulnerabilities sometimes in hardware. And we did not want our keys to be part of that. So the alternative to that is to move the keys off, and the keys now are signing. Now, the naive way to do this is to just sign anything. And you do that, it's like no point in having your keys off, right? You could just, why put the keys off if they'll just sign anything? They can't blind sign. So they need to validate something. So the compromise we have for that is that the keys will be able to know that there is a whitelist of addresses, and that's the simplification of it. There's a little bit more to it. If you want to get into it, we can. But they will only let money go out of the system to known parties. And in that case, what that threat is protecting against is in case these more powerful and slightly more vulnerable servers are, if they were compromised and they were asking the key module to take all the money and send it to some hacker's address, they would refuse. So the worst thing that they could do is send it to one of the members. And again, we know who the members are. If the money got sent to one of the members, it would be very easy to send it back and deal with the situation. So that's why we have the pack list. Obviously, you mentioned the trustless aspect. It would be great if we could have that. But really, we recognize the limitations of the system, and that's basically the way to solve that problem.
Yeah, and somebody said, "Oh, why can't they just be voted in, like EOS, for example?" And it also does sound a little bit to me, kind of like a DPoS system. It's like, oh, we can facilitate super fast, rapid block times because we've verified everybody who's part of the federation, is a good, honest, trustable guy. I mean, it sounds a little bit like that.
Yeah, I mean that's basically the idea. Is we have people who are able to trust. It's actually kind of interesting there. The parties in Liquid, what makes it work for the security model is they have a common interest in keeping this blockchain alive to keep the Bitcoin secure, but they also are competitors in a lot of cases, and they're distrusting of each other. So that mutual distrust keeps them honest in a sense. So if they all know, if I misbehave, someone could act against me. So they it's a good incentive to keep everyone in line.
So, how much control does Blockstream, other technology provider, have in the system? Like, is the hardware that you're talking about providing, is this open source? Can I build my own competing Liquid Blockstream hardware if that is what is required? Or is Blockstream kind of, the god of this whole system?
Yeah, that's a good question. So, yeah, Blockstream does not have any control over the network. The hardware itself, as you mentioned, is leased to the members who are doing this. So that is kind of the one part of it, which I'd say is the secret sauce in a sense. But the way we set it up and our obligations to our customers is that we provide all of the source for all of the components down to the key signing for them to be able to run this on their own. So yeah, if they didn't like us and they decided to get rid of Blockstream, they could, they would have to return the hardware, but they could still run Liquid on their own with with a different key module that they're building on here. So it's certainly possible. We designed the system so that they could fire us if they wanted to. We hope they wouldn't. Or if Blockstream went out of business, that Liquid would still be able to survive without us. So that's a key part of this is that we really don't have control. Really, the only control I think you could say we have is organizing parties at the beginning. Someone has to get the party going. Someone has to organize everyone and talk to everyone and get them involved. So we put a lot of effort into building this federation up, and over the last 2 years, we've grown the federation from I think like the initial 5 who kind of expressed interest to the 23 we have now.
Are you able to disclose who these 23 are now, or where they are and whatever?
Yeah, let me go to our blog post on this because I don't want to leave someone out. It's real easy to miss someone with this big list.
Yeah, sure. And
all right, yeah. So, go ahead, Flipper. I'm just getting it up now. Did you have another question, or do you want to just go into the list?
I mean, I do. But if you want to, post the link or whatever.
Yeah, so if you go to blockstream.com/blog, it's the top link on there. But I can read through the list as well. We have Autonomy. They're a trading group. We have Atlantic Financial, so it's a financial company. You might know that with Bruce Fenton. We have BitBank. They're based out of Japan. There's also a BitBank in China. That's not them. There's Bitfinex. We have BitMax. It's out of Switzerland. We have BitMEX. We have Bitso out of Mexico. We have BTC Box out of Japan. We have BTSE, which is a Singapore exchange. We have Bull Exchange, which is a new exchange. We have D Group, which is a trading group. We have Coin One out of Korea. We have Crypto Garage, which is a startup out of Japan. We have GoPax Exchange, operated by Streamy, that's out of Korea. We have Corbit out of Korea. We have L2B Global, which is a OTC desk. We have OKCoin out of China. We have The Rock Trading out of, I believe, Malta. And we have the SIX Digital Exchange, which is this stock exchange in Switzerland. And we have UnoCoin out of India, Zappo, and XBTO, which is a large market maker. And we have Zyfe. So those are the members of it. The countries represented there, United States. Some people have offices all over, so it's kind of hard to pin them in one location. Singapore, we have Japan, we have Switzerland, we have Hong Kong, we have Japan, Korea, China, India, Italy. I think I might have missed someone in there, but it's pretty spread out all over the place.
Yeah.
And
Yeah,
Argentina's Zappo.
that definitely does sound pretty diverse. Nice pool you've got there. But should traders attach a discount, do you think, to LBTC, given the potential of, some kind of theft risk? And follow up to that, I would say is, and maybe you don't want to say because you're not a law guy, but supposing that they did collude to do something malicious, even though you would think they're economically incentive to be honest and good. But assuming they did, because there was a lot of money at stake or something, what kind of is there some kind of contract set that they have to agree to? Is it like theft at that point, or is it exploiting technology? What do you think?
Yeah, so it's a couple of good questions. You asked if there's going to be a discount on LBTC. So I don't expect there to be any kind of markets distinguishing LBTC and BTC. So the way that I would expect this to work, and again, people are free to do however they want, but this is a pretty flexible platform. The way I would expect Liquid to work, at least on the exchange side, is exchanges would keep a portion of their funds in LBTC. So exchanges right now have hot wallets, they have cold wallets, they'd probably have a LBTC wallet, and they would keep that some portion of their funds in that reserve. And when a user comes to the exchange, and let's just say I'm at Bitfinex and I want to send it to BitMEX. So if I wanted to do that, I would go to BitMEX. I would ask them for a deposit address. I would then get that deposit address. I would take that to Bitfinex. I would say, please send LBTC to BitMEX. And they would send it right there. And your account in 2 minutes would now have more Bitcoin in it. So it's up to really the exchanges at that point to see if they have too much LBTC or too little. If they have too much, then they can get out of it very quickly. Mm-hmm. If they have too little, this is something that was mentioned on the Twitter, the slow confirmation times. So they want to make sure they have enough so that they can peg in and get what they need in 17 hours. And worst case scenario, we're out of LBTC. We can't do that. It's like going to a bank and asking for $1 million in cash. You might not be able to do it. And at that point, you would go in and, they send regular BTC instead at that point. If you ask for, more than they had. The other part of it too, and we're adding support to our green address wallet. We're also talking to a lot of hardware wallets as well that are committed to supporting Liquid. So the idea is, I could remove funds rather than just sending it between exchanges, as I could pull the money back to my wallet and then send it back to the exchange when I'm ready to trade again. And that's really to eliminate the single custodian risk that you have already today on an exchange. I think you also mentioned another part is like should I'm trying to remember, you had another part about the risk of it. What's that? Go ahead.
The legal aspect of it should have.
Yeah, the legal aspect. Yeah, so each member of Liquid that's running a functionary, and the participants as well, that don't have the functionaries, they all have contracts. The contracts are that they need to keep it up. They need to keep it patched with the most, if there's an emergency update, they need to keep them updated. If they move it between jurisdictions, the Federation needs to know and approve of it. But then in terms of, if someone steals the money off of it, really that's going to come down to the courts at that point, right? So if someone just steals the money from it, it's going to be a pretty big lawsuit. And you can see whenever the money gets, if let's just say BTC gets taken out from the wallets of the functionaries, at that point you'll know which party signed off on it. It's very clear who gave those signatures to do that. And it would be an ugly court situation likely in that case. And I can't imagine too many people wanting to be a part of that.
Sure. Somebody said in the chat, and I thought it was a good point, is LBTC to BTC what Tether is to dollar? Like, is it, dollar is obviously very inefficient in every aspect of the way, so Tether just increases the efficiency of that coin. So is LBTC just to, allow, is it the main goal just to allow for facilitate faster, more private transactions, kind of like the private federated upgraded, sidechain Bitcoin?
I think that's a really good analogy. Like every analogy, there's going to be some differences where it's, not exactly 100% accurate, but yeah, that's the idea, right? Why do you use Tether? You use Tether because I can send it anywhere very quickly to all these exchanges, and a lot of these exchanges will treat it as good as dollars. And the difference there between Tether, I don't want to get into all the Tether FUD that's out there. People have different opinions about it, but the idea is, at least with Liquid, it's very easy for anyone to verify that there is exactly the amount of Bitcoin being held by the functionaries as liquid Bitcoin at any point in time, 24 hours a day, 7 days a week. All you need is a node on Bitcoin and a node on Liquid, and you can make sure that those things balance out. Even on if Tether did everything possible that they could do, they still couldn't give that kind of reliability. And this is, assuming they're doing everything possible to make public audits available, because you're still having to, trust a bank and trust that there's no other, debts that they might have or someone ahead of you in a credit line. So that's I'm not saying Tether is a bad thing. Tether enables a lot of very positive use cases, and that's it. Yeah. Are you going to put all your life savings in Tether, or are you going to keep the amount of Tether that you just need to trade with? And I think most people would probably keep most money, aside, except for what they need to trade with, and then use Tether for the rest.
Well, so of the 23 that you listed out, all the different platforms, how many have actually at this point in time? Just to get an idea of progress on this on the development front, how many are actually have integrated and maybe done some testing with this? I mean, is it none, a handful, or are all ready to go?
Yeah, so we did have, just to give you some idea of the growth of the network, really just from when consensus was in April or May. I'm trying to remember the exact dates. Around consensus time, I think we had about 8 to 10 members signed. So we've really added a lot very recently. There's been a big rush, even in the last couple of weeks, of people wanting to join once they've seen this is real. So it's basically the integration that we've seen so far has been some of the early members. And we had a test network that we had. It was basically a very centralized Liquid version where Blockstream ran all the functionaries, and it's for testing and integration purposes. So we had quite a few exchanges that participated in that program, and did some integration. So yeah, the ones that just joined recently, obviously they're going to be a little slower. Some of them are evaluating use cases, but of the ones on the list, I know of at least like 7 or 8 that are pretty heavily doing the integrations right now as we speak. I think a couple of them might be ready and they just need to turn it on, but it's one of those things where you don't want to be the first one to turn it on because there's nowhere for it to go. But yeah, this is our focus for the rest 2 years. Let's get it enabled. Let's get it turned on. Maybe start some private betas where a couple people can use it, in a limited fashion. Get everyone comfortable with it. It's new. It's different, and people are going to have to warm up to it. They're going to stick their toes in a little before they dive in head first.
Yeah, absolutely. It's new. It's scary. Do we trust it? Are the bugs? All that kind of stuff. Yeah, it's definitely that kind of bedding in period. So, say of the people that you've got kind of doing well on the integration, I mean, how many BTC have you so far, quote, pegged in right now?
Yeah, I don't actually have a number on that. We need to write a tool to do that. That's kind of one of the things we've been meaning to do. We did do some fun things. We did have one customer that pegged in on the second block. They were very eager to be first. We actually beat them in. So it was kind of a little fun game we had of just seeing who could get the first peg-in transaction in. So yeah, we had a couple of users right in the first blocks pegging in Bitcoin. Everyone's doing pretty small amounts right now, just to make sure everything's working right before it gets going. So yeah, we pegged in. We actually issued some assets right away. At the time that the first block was created, we actually had 20 members. So we've added a couple since. We created one asset. 20 is basically 21 asset quantity of the asset we created as a commemorative asset for our members. So we can send those to everyone. We've sent those out to people who've integrated a little bit already. So we got those in.
It's like a member's badge, the honoring first asset.
Exactly. We had to do something fun. So yeah, it's all about sending those around. But yeah, this is the thing, and the interesting thing is, the way we have members right now, we have, looking at that list, I think we have about 4 or 5 different institutional level traders that are part of this, market makers and other financial institutions. They are very eager to use Liquid because this is a core part of their business, right? If they can get money to an exchange faster or move it between exchanges faster, that's so much more trading they can do. And they're all chomping at the bit, and it's actually kind of nice because it's a good motivator for these exchanges, right? Whoever these exchanges get integrated first, they've got the power of people who are doing billions of dollars a year of trade ready to go. And so that's really what we're getting together. We're doing a kind of member summit next week, just online to get everyone talking, just talk about use cases, check progress, and go from there. So yeah, it's really, this has been a long time coming for Blockstream. We started working on this at least, I've only been at Blockstream a year. It's been going on for at least 3 years. And I think people might have not, started to expect maybe it wasn't coming or didn't know when it was coming. And it's real now, and that's what you can see from going from 8 members to 23 in just a couple months. And I've just been talking to people nonstop since then, since the press release ran out about exchanges and other traders that are wanting to get on the platform. So it's been, I think it's going to accelerate very quickly here, and that's what I hope to see by the end of the year.
It's funny you mentioned market makers on board, because obviously liquidity has always been a problem with Bitcoin. The nature of its kind of decentralized exchange network, liquidity spread out, and obviously Tether facilitates better liquidity straight away through using Tether on a blockchain, be it through Omni or ETH. I mean, is it possible? I don't know. Is it possible to issue a Tether on Liquid? And providing it's cheaper and maybe faster, kind of homogenize the liquidity of Bitcoin and dollar or fiat pairs, through issued assets on LBTC. Is that the dream?
Absolutely. So yeah, you saw Bitfinex as a member, absolutely getting things like Tether. There's so many of these other coins that are coming out too. I think it's going to be common, and they're going to have different security properties. They're going to have different banking requirements. They're going to have different legal requirements. Liquid is a very neutral platform on this. I mentioned, about the confidential transactions, and so we have what's, the confidential assets. So anyone can issue these assets on Liquid. And again, if Tether wanted to do this, it would be very easy, because all you need to do is get some of the Omni versions or the ERC versions, burn those, and create Liquid versions instead. And you can have these 3 chains that all have different use cases. Perfectly fine. If Gemini wants to issue their token, if Circle wants to issue their token, they can do that. And what's nice is it doesn't really affect anyone else in the federation. And it's all there. It's all, when you issue it, you can issue it privately or you can issue it publicly. But when you do these transactions and you send it, it's really cool, is you have no idea. If I'm just looking at it through the blockchain, I have no idea if someone's sending Bitcoin, if they're sending Liquid Tether, if they're sending Liquid Gemini coin or Liquid Litecoin or Liquid Flibber coin or whatever else is sending. It all looks the same to someone who's looking as a third party. So that's a really good thing for privacy. So, if someone's sending a ton of Tether to Bitfinex, it's a good sign that you probably want to buy, right? Or they're trying to trick you. Someone's trying to buy some Bitcoin. If someone's sending Bitcoin to Bitfinex, it's probably a good sign to sell. Someone's trying to get rid of it. So, with Liquid, I can move all those things and no one even knows which one I'm sending.
It's a very interesting, unique value proposition, and definitely fills a unfilled niche in the market, which clearly you're trying to capitalize on. And I did watch Adam Back's talk quite a while ago on confidential transactions, maybe a San Francisco Devs talk or one of these talks anyway. And he seemed to have a very, very good understanding. I was super impressed. It made me a fan about the requirements from, like different quote institutions for, the need for, basically confidential, privacy. So, and I'm always interested in these confidential transactions for like mixing Bitcoins, and, the fungibility of Bitcoin is, in my opinion, really bad. It's absolutely terrible. Obviously, we have CoinJoin and stuff like this as well. Okay, great. But, can you give us a little bit of, TLDR on how the confidential transactions work? Could I, for example, create an asset, that is totally private, my Flibber coin and all that kind of stuff? Just in summary, TLDR.
Yeah, so confidential transactions and confidential assets. I'm going to go maybe down to about the 10,000 foot view. Beyond that, it's starting to get into crypto magic spot, and might be more worthwhile to have someone like Andrew Polster on, who is the crypto guru. But he's going to talk over my head, talk levels I don't understand anyway, so I don't know how helpful it'll be. But the basic idea is you want it to have a blockchain that you can validate that the inputs of a transaction are the same as the outputs. And they might be split into different amounts or different numbers of divisions, but that you can validate that the inputs and outputs are equal. So when you have a confidential transaction, what you're doing is you're obscuring the asset type. So the ID in the asset type in Liquid is defined by basically a very long number. So it's a big hex string. In this case, you can obscure that by doing elliptic curve mathematics on it, using a private key, and then you can publish the public key of it. And you can also obscure the amount the same way. So, if I had 100 BTC, I could, obscure that so it looks like some other number that doesn't mean anything. The way the math works for it, and I'm not going to explain how because it's even above what I know, but the math is you can still prove, once you obscure these things, that if you have A plus B equals C plus D, before you obscure it, the obscured version of A and the obscured version of B plus added together equal the obscured version of C plus the obscured version of D. So that's making sure that, I can make sure that that equation adds up. Now, there's one other trick in confidential transactions, and that's making sure you're not actually using negative numbers. So if you didn't have that, you could do a really nasty trick. So I could create a lot of Bitcoin for myself. So let's just say I had 1 Bitcoin, and I sent it to have 2 outputs. And one of the outputs is 1,001 Bitcoin, and the other output is negative 1,000 Bitcoin. I could leave that negative 1,000 Bitcoin on someone's doorstep, or just leave it there, never spend it. And now I've made myself 1,000 Bitcoin richer. So that's a problem you definitely need to solve before you do this. So how do you do that? What you need to do is what's called a range proof. And that's a way of proving, without revealing the numbers, that every number, every output is a positive number. So once you prove they're both positive and they add up to each other, there's no money that can be destroyed or created out of this, and that everything adds up. So that's kind of the high level view of it, of how it works. So yeah, it's really powerful. And what's really cool too is you can reveal certain parts of it to a third party if otherwise. So maybe I could reveal to a third party that one of my inputs was Bitcoin, but not tell them how much it was.
Yes.
Or I could reveal to one of my parties, someone else. If I'm an exchange, I may have auditors that want to make sure that I actually have the amount of Bitcoin that represent my customers' deposits. And I could do that by revealing the amount and the asset type to them in a provable way, that they could take this key, they could decrypt it, they could prove that that key actually is what was used to encrypt it, and that the values match what you say they match. So this is something that's very powerful for limited third-party auditing, where general public still has no awareness of what's going on, other than you're not cheating.
Thank God we just went to the overview and not to the deep stuff then. But thanks for that. Sutoshi wrote, and this is a good one, anything that is tokenized that isn't a bearer asset is an IOU. Is it fair criticism to call these IOUs?
Yeah, so it depends on which asset you're talking about, right? So if you think about it, something that's like a CryptoKitty on Ethereum, that's kind of a bearer asset. Like, you're not going to go redeem that somewhere for a card. You're just going to have it, and maybe people think it's interesting and valuable. So I would say that that's a bearer asset in that case. Now you have something like Tether, right? That is not, it's still there's still an element of trust. You're trusting the issue of Tether, that they're going to actually have money in the bank and that they'll actually pay it to you when you ask for it. So yeah, issued assets have an element of trust to them. That's certainly true on any platform. Bitcoin is special. Bitcoin doesn't have any trusted party that's issuing it. It's done, verifiably through mining of the history and validating blocks going back 9 years. That's always the case. In terms of liquid Bitcoin, it's somewhere in the middle, right? You have a federation that is redeeming it on to certain parties on demand. There's enough privacy features that they couldn't necessarily gang up on you very easily without extreme collusion to pass that out. But it's not as good as regular Bitcoin in terms of bare asset. It's a little bit different. I mentioned in an earlier question that you could have the idea of like liquid Litecoin. Litecoin itself is not verifiably pegged by the functionaries, but you could have like a different federation. So maybe like I know you're a big fan of Litecoin, Flipper. I heard you earlier. You could have Charlie.
I'm gonna say this sounds like Litecoin's dead even more.
You could have Charlie Lee and his buddies create a multi-sig cold storage of Litecoin and issue liquid Litecoin tokens if they wanted to. So yeah, we made a joke that there should be Magical Crypto Corp of Fluffy Pony and Charlie and all these guys locking up all these coins and issuing tokens, but they're not interested in that. But yeah, you could do that. But you're trusting this federation. And again, why is that useful? Trust sucks. We all hate trust, but in the end, there's a lot of things trust enables to do. No one would be trading on an exchange if there wasn't some element of trust anyway. I'm depositing Bitcoin there. I'm depositing Litecoin there. So maybe, if Bitfinex was issuing a liquid Litecoin token, and I already had Litecoin there, that's okay. If 10 different exchanges worked together and issued it, that would be maybe more secure. That's interesting. So we're going to explore those use cases, see if anyone's interested. One thing I did... Yeah, go ahead, Flipper.
Well, while you're on the subject of trust, and it's always going to be there, but this sounds very similar to maybe an upgraded version of ETH. I always want Bitcoin, everything to be on Bitcoin. Hardcore maximalist. We'll get rid of ETH. You can't run a node anyway. But say, for example, on ETHFinex, they've built it in such a way, and I believe the dream is for this with EOS Finex as well. That I can keep my coins on my wallet on my PC. And maybe just open a payment channel to Finex or whatever it may be. I don't know the technical details. And, and then I would trade there. And at the end, when I closed my account, it would settle that account, if you like, and, boom, I'm away. And so I think, I would like to see that for Bitcoin, a trustless thing. I don't think exchanges want to hold people's money, really. They want them to trade, but, they don't really want to hold people's money. They're not a bank. So would something like this, some kind of trustless model like this, could this be done, for say like these market makers or anybody in general, to allow them to trade and keep them themselves and just settle like that? Is that, what do you think?
Yeah, I think that certainly is possible. So, the idea of having multiple assets that are part of the platform, there's always going to be trust with the issuer of an asset. If I'm representing dollars in a bank or a vault or wherever, there's going to be some trust there. But you're only trusting the issuer at that point. Like, you want to minimize the trust to people you have to trust. So Liquid, I mentioned, it has multiple assets. You could do something that's a single transaction atomic swap of any two assets on the platform between any parties that will swap with each other. So yeah, I think there's a big potential there for that use case. And again, you're going to get settlements in 1 to 2 minutes in that case. Versus, trading right now, it's, millisecond trading is happening right now. So it's a different model. I think people will embrace this. I think a lot of the OTC market could see some of this possibility happen with Liquid, where you just, you have parties that maybe don't know each other, maybe aren't that familiar with each other, that would like to do some type of slower, maybe larger, more private trade. They could use Liquid for that purpose, right? I could trade tethered liquid tether for liquid Bitcoin with some stranger, and I know they're not going to rip me off because it's in the protocol.
Okay, yeah. I mean, well, one thing I wanted to know was if I wanted to peg in and peg out of Bitcoin, LBTC. Is it easy for me to do that? Like somebody mentioned before, you could cross-chain atomic swap in. I don't know if that's possible. I'm not an expert on this. But how do I do that? Does that happen on exchange? Can I run a node and do it myself? Can I cross-chain atomic swap in? Do I have to? Is it just a Bitcoin fee? Does Blockstream take a miner's reward? Like a Zcash style founder's fee from each transaction. What about that?
Yes, I think you covered a lot. There's who's doing the peg-ins, who's doing the peg-outs. So really, while it's getting going, it's really going to be restricted to the members. I think down the road, I think we can have some discussions about, what does it take to peg in or peg out. The peg out has to be that way right now for security reasons. Otherwise, it's just too vulnerable to someone who's looking to attack. I would love to have it so anyone could peg out in the future. But someone did mention you can do, can you do atomic swaps of liquid Bitcoin or Bitcoin? The answer is yes, you certainly could do that. I could deposit the liquid Bitcoin on an exchange and they would credit me Bitcoin and then withdraw it. So that's another way you could get out. But you're going to need to have, someone who's willing to accept that. For peg-ins, for a technical answer, you couldn't stop me from sending cash to you in the mail if I knew where you lived. Right. It's the same idea with Bitcoin. Is like you could send money to the Federation and it would be pegged in if you really wanted to. We're going to try to make sure people don't accidentally do that because the peg out is restricted, right? We don't want people to lose money by pegging in and then realizing they can't get it out very easily, and maybe they don't have any accounts on exchanges and they just lost money and now they're upset. So we don't want that to happen. So what I'd expect early on is you would go to an exchange. You already have Bitcoin there. You're going to withdraw it into your liquid supporting wallet. You'll have it running there. You'll have liquid Bitcoin, and then because you got it from an exchange, we're pretty confident that you have an exchange account somewhere, and then someone will accept it from you, and you go back in that way. So that's pegging and pegging out probably will be mostly the exchanges maintaining a balance for a while. We'll look at it back in the future when the network kind of gets a little bit more public and a little bit more open.
I suppose with the kind of Blockstream providing the nature and technical support and all this kind of stuff, I mean, it's possible that you could say, okay, we'll start giving some fees. Now it's getting, it's like Google, isn't it? You provide a Google shopping thing, let it for free, get every single merchant on it. Everybody's relying on it for their income, and then when everybody's dependent on it, then you go, okay, now we're going to start charging for it if you want to be on it.
Yeah, so you want to talk about the money and charges for that. So yeah, just how we have it set up right now. The members of the network, they are basically paying for support for us, and just as an introductory to get the network going, we've waived some of those fees for people. The other fees that are part of the network, there are if you peg in Bitcoin, that's a Bitcoin fee, right? You're sending Bitcoin. We have nothing to do with that. It goes to the miners. But it's a cost. When you are using Liquid, there is a transaction fee that's part of it. It's set to be 1 Satoshi per virtual byte, which, for a typical transaction and current Bitcoin prices is, in an order of magnitude of like 10 to 20 cents, I believe. It's their bigger transactions than normal, so it's still pretty cheap. Blockstream does collect those and uses those for a fee pool that is used for the peg out transactions. So we fill up a fee pool that the functionaries are using so that when people are pegging out, that there's fees to pay the miners to get those transactions confirmed. So that's where the fees are. Really, in terms of the base layer of Liquid, we're really not in a good position to make a lot of money off that base layer. As I mentioned, we can be fired at any point in time. So it's really hard. We don't even know when people are transferring Bitcoin or how much they're transferring. The functionaries are run by the server. So if let's just say we said like, we got all of the Bitcoin traffic here. We were making this release of Liquid and you have to pay $50 every time you want to transfer it. And functionaries just tell us to get lost. There's nothing we could do about it. We could be like, all right, that's really sad. I guess we will stop making new updates for you. That's the worst thing we could do. And at that point, if Liquid's very successful, everyone's using it in this scenario, there'd probably be a big room for competition of people who are looking to take in and support the network. It's like with Linux, right? You can have Red Hat that's giving you that level of support, and people are willing to pay for it. But if Red Hat decided to charge crazy fees or just really upset their customer base, there'd probably be lots of people willing to step in. Liquid's based on Elements, which is an open source project that we've built and we've shared. It's really not much different than that, and so really it'd be pretty easy for someone to jump in and replace us if we weren't doing a good job or tried to, extort too much money from the system. Really, what it comes in our money-making ideas for Liquid really is, we are the experts on this platform. We can build a lot of interesting things on top of Liquid that would make and enhance people's businesses. And I don't want to get too much in the details of exactly what we're planning, but we have some plans to build some interesting use cases that would be using Liquid. But we don't have any special information or special access that anyone would have other than just being experts in the platform.
Yeah, I mean, it's good that you bring this up because that's exactly where I wanted to go to. It sounds a little bit kind of like almost like the Red Hat style model of, it's open source, but we can, we provide a great technical service and whatever. But, you're talking about providing tools to build on top of it. And, given it's kind of like a similar DPoS system to EOS, and obviously they've raised all these billions of dollars and they're, plowing it into developer tools. What is the plan and what are you doing with regards to facilitating developer tools? Like I, for example, love Bitcoin lib.js, and the open API available through blockchain.info back in the day, to get in there and play around and understand it on a deeper level. So what tools are you facilitating so that, and is it possible for me to kind of download a Bitcoin, a LBTC JavaScript file that, is open source, and I could create a platform where people can create their assets? Like, where are those tools coming from? When are they coming? What about documentation? Is it open source? Can I create anything? I know there's a lot there.
Yeah, there's a lot there. I want to make sure I get to it all. One of the nice things about Liquid is it's based on the Bitcoin code base, and it's got a lot of the same APIs as Bitcoin. So, we've been doing a lot of integration work. I've personally done some as well. And, I've ran into people that have existing systems written in Go or in Node or in Python and, pretty much every language you can think of. And the existing Bitcoin tool sets that already are there, every single one of them I've ran into is able to support Liquid because it's just doing RPC calls the same way. And a lot of them are the same. And there's some minor differences with things like assets. But yeah, you can handle those minor differences. So, we've been very, been able to use a lot of these tools. Going a little bit further, and Bitcoin is a library that Nick Ladourier wrote for doing .NET programming with Bitcoin. He's extending that. He's extended it for Litecoin and I think a few other things. He's extending it now for Elements, which would also include Liquid. So yeah, there's a lot of support there. Then you're talking, okay, there's other parts of the ecosystem, hardware wallets, wallet support. Where's all those coming from? So Green Address is our non-custodial two-factor authentication wallet. We're building support for Liquid in it. We're talking to all of the big hardware wallet manufacturers to support Liquid so that you can, have, LBTC and any other asset locked up on your wallet. So if you're an exchange, this is really good news for you. If you're a trader and you want to withdraw your funds, out of a single exchange to the custodial model, the shared custodial model, you can do that. So, it's going to take a little time, but because it's so similar to Bitcoin, I think that you'll start seeing things pop up. We've got 2 different block explorers that are going to be launched for Liquid soon, and they will both be open source. So this is something other people can build on top of. So yeah, there's a lot that's already out there that's usable for this, and I hope for more to come in the future.
Yeah, I mean, you can't go wrong with a good block explorer. Really helps open up the network and allows people to explore and dive deep. I mean, blockchain obviously info, a great one. Abe, I remember running that back in the day. I don't know if you're familiar. Abe, PHP block explorer for the web. Oh man, that was painful and slow back in the day to sync a node and then get that thing to process all the transactions. But yeah, I mean, in general, I'm very positive and happy that that yourselves and so many other people are building stuff on top of Bitcoin, for Bitcoin, and just the whole thing. It's all just great. So, whether I think it's a good idea or not is completely irrelevant. The market will decide. And it's all very good. But I'm kind of done. I've got a good explanation now. I don't want to take up too much of your time. But I know that there's a few people that wanted to ask some questions. So maybe if we start things off with Roy.
Yeah, absolutely. I got a little bit more time for some questions too. So yeah, feel free to add in.
Yeah, hello, Alan. This is Roy from Bitonic. So first, thank you for being here. I just learned where we from Bitonic already applied for access to Liquid. I don't know the exact details, but that's nice, right? All right, so I have a couple of questions. The Liquid sidechain is live, but it's still in beta, right?
It is completely released. So we are out of beta.
Okay.
We are completely released at this point.
Because the FAQ on your website says it's still in beta.
Yeah, we're in the process of updating it right now. So we'll have some updates on there very soon.
All right, great. So the other question I have is in the FAQ, you guys also talk about a monthly subscription fee. What is this monthly subscription fee going to be when you upload?
Yeah, so we have. Are you asking the dollar amount or just like what is it for?
I guess the dollar amount. Yeah.
Yeah. So the subscription fee, that is, I think it's $3,000 a month for support and hardware support of the functionaries, leasing of the functionary. If it breaks, we'll replace it. So it's covering quite a bit right there. All the software updates. So that's what helps support our staff building and supporting this network. Again, we're waiving it for the first year of the network to help encourage people to join and get in there.
All right, that was it for now. Thank you.
Is it only those people that pay $3,000 a month can create their own confidential asset, or is that open to anybody?
Yeah, so you would have to be connected to the network to be able to do that. You would need a full node, or to create a transaction, or to have someone who's connected to the network to do it for you. So, we're talking about how to open this up more in the future. I know it's a big ambition of Samson and Adam. We want to make sure we do it right. We want to make sure the network's successful, for the people who are part of the launch before we go. We want to make sure it's working before we say everyone come on in and go do whatever you want on it. So I think that's where we're going. But yeah, I see something in chat saying regardless of the size. Yep, that's exactly right. It's it doesn't matter who it is in the network. Again, we've got some really big exchanges, some really big companies. Some of these companies that are in here are massive, and some of them are pretty small. So it's a big mix. And I think we're going to start seeing, might see a couple more that are even bigger that will be joining.
Yeah, I mean, I think that's what's contributed a lot to the dominance of Ethereum in the blockchain tokenized asset model. Is that anybody, anywhere, anytime can create a online digital security. Okay, we'll call it that, whatever, but you know what it means, an ERC20 token, to say, hey, I've got a really cool idea, I'm going to give you some equity, or maybe I'm not, it's just a utility token, hashtag, but, send me some money, I want to get going on this. And that ability for anybody, anywhere, at any time to be able to do that is just opens it up globally. And so obviously it's a little bit disappointing that that is not going to be the way. But I suppose there is RSK as well. I'm not sure on how that works though.
I think right now, I mean, it's temporary. The idea is we want this to be reaching as many people as possible, and so again, we're just trying to take it one step at a time. This is new. Having everyone show. It's like the guy who put on his Facebook page having a party and he forgot to make the sharing session. To his friends. There was like 8,000 people who showed up at his house and trashed it. It's kind of the same idea. We want to make sure everything's working and the functionaries are good and people are going to be able to get a good experience. The network's reliable. There's not any major bugs where we have to do any kind of patches. Just keep it controlled while we're getting it going. But that is our goal in the end, is to have this open where anyone can create an asset just by running a full node, and they would connect through functionaries who who would share access to their, any number of these functionaries would share access so that people can connect their nodes and add value to the system. So one step at a time, we'll get there. I think we all have the same vision. It's just a matter of we want it to work and have a successful experience for everyone first.
Yeah, I guess the worry with that, with the federated model versus the ETH model, is that if, say, Liquid became large enough in many years' time and was handling and responsible, and people coded in and integrated to such a deep level that it was kind of quite entrenched, if you like, that I could spin up a node and say, hey, I want to create a confidential asset for some illicit thing against the laws of my country, and the federation would say, well, we're not going to allow you to create that asset, and then you'd be like, well, what are you going to do?
Yeah, so that's the things like how would the federation know? So really, the federation itself, really, you could think of it like a common carrier right now. So there's different connections you have over the internet, and things happen, and they're not necessarily responsible for what you're sending over those messages, or what the mail company's not responsible for what you mail. So we really think that's the right analogy in this case. In this case, if you're creating an asset, all you're doing is saying, keep track of this for accounting purposes for me. Make sure no one creates more or less unless I have authorization for it. And make sure no one, when people send it, that they are actually have it. That's really all that they're being asked, and they have no idea what it is that they're signing. So that's it'd be very hard for them to gang up on someone for the purpose of an asset.
So with regards to creation of an asset, let's just say that I decided to create WhalePool coin, and the federation said, yes, okay, we'll allow you to create that, and okay, cool, I've got it created. It should be pretty safe at that point. What about kind of the advanced features of securitization of blockchain? What about things like, if I wanted to say, I want people to have voting rights, I want to pay dividends, I want it to be kind of DAO-esque, what about those more advanced things and LBTC? Where does it stand on this?
Yeah, so Liquid is based on the Bitcoin scripting language. There is a bunch of disabled opcodes in Bitcoin. We re-enabled a couple of them. I'm not going to try to go through which ones are or aren't, but there's a little bit more capabilities there than Bitcoin that we thought were reasonably safe once that. Satoshi disabled a lot of them just because they might be unsafe, and some of them we know are unsafe. But some of them we are a little bit more confident in. So there's a little bit of smart contracting in there for the script. It's never going to be the Ethereum model of the world's computer where everyone has to execute these more complex programs. We found that approach really doesn't scale well. We've seen Ethereum be crippled by a bunch of digital cats, and we don't want to have that for any kind of serious world financial system. That something like Liquid or based on the Liquid code could support. So that's really hasn't been our approach. As far as doing things like dividends or voting, really the answer to that is you can do this in provably cryptographic ways without putting it on the blockchain. So if I want to prove that someone owns a number of shares, they could prove that with digital signatures and showing their binding keys to whoever they're turning these voting rights to, and whatever that means for the company. Maybe you're firing the CEO if it goes. These are things that are all fairly centralized anyway, right? Like someone has to collect these votes and make a decision on a lot of these. You get a little too fancy in there, you do end up with things like the DAO where, oops, there's a bug and someone took all the money. So yeah, that's part of it. We also, this is a kind of a lesser known thing at Blockstream, but we have a researcher, Dr. Russell O'Connor, who's working on something called Simplicity. And Simplicity is a kind of a scripting, it's like a programming language that is, you can verifiably prove that it's doing what it says it's doing. And again, that's my kind of business side explanation of it. I'm sure I butchered it. But it's a way that you can actually, prove that it's doing what it's supposed to be doing, rather than having JavaScript-esque code that looks like it's doing one thing. You can't prove it. You can't look at it. Even the experts are looking at it, reviewing it, and there might be a bug. So that's an area of research for us. We think it's interesting, and we're pursuing it, and we want to build it. But again, this is doing it this way, and we're not Facebook where we're going to move fast and break things, and we're not going to have a DAO on our hands where there's bugs. We're not going to have a multi-signature bug that loses people hundreds of millions of dollars. But that just might mean things might move a little slower there. So, things like dividends, you have a share, and you have a pre-dividend share and a post-dividend share, and you can do it in a pretty trustless way where someone redeems it and gets a Bitcoin dividend or a Tether dividend or whatever it is. So there's all kinds of interesting ways you could do these things. But the nice thing is every node doesn't really care about it. The only people who care about these things are the ones who are actually using it. So that's what we're trying to do as much as possible.
There seems a little bit of confusion. So with regards to the issuance and transacting currency of an asset, so the creation of an asset, do I need permission from the Federation to create it? And obviously the Federation has to kind of like approve each transaction, but what the creation?
Yeah, creation is just a special kind of transaction, liquid transaction. So it's just a special kind that says, I'm going to create this new asset. Here's the ID of it. Here is the amount I want to create, and you have the option to create what's called a reissuance token, which allows you to create more of it at a future date. So you could think of something like, if I have shares in a company, I may want to issue more shares to dilute in the future, but I need the board of directors to sign off on this. So I could assign the reissuance token to a multi-signature set of signers to decide when I can reissue shares or not. Or something like Tether. As they get more bank deposits, they want to issue more Tether, and you have a reissuance where the bank needs to sign off, and the CEO of Tether and like some auditor need to sign off before you can create more. So that's another way you can do it.
All right, cool, thanks. Is there anybody else with Mike who wants to maybe chuck Alan some hard questions? Tumbleweed.
Well, I'll pop in here occasionally, see if anyone has any more questions down the road. Again, we're waiting to get. You'll probably start seeing Liquid more once the exchanges are ready, once they've done their testing. They want to make sure they're not going to lose anyone's money, and they want to make sure they do it right. So, again, I hope by the end of the year, everyone who's trading is able to use a couple of these exchanges and send Liquid and not have to wait for deposits, because waiting is not a good way to make money trading.
What are you looking for on timelines with regards to actual live, public use case, between exchanges and market? What timeline are we looking at here?
I hope to have a lot more of that information next week. I'm going to be talking to every one of the Federation members, just checking on progress, see how we can help, and see where they're at, see when they're going to open it up. Wouldn't surprise me if they did a couple of private betas, maybe open it up for people who are already members, and then maybe open it up for a couple select individuals. That's just an idea of how they might want to open it up, but it's really in their hands at this point. So I'm going to be pushing them, and we're giving a lot of resources of developer help. We've sent developers to multiple exchanges already to help them integrate, help them get set up, and we're continuing to do that. And we want Liquid to be a success, and we're putting a lot of investment in getting up and running, and hopefully it benefits the trading community and adds more liquidity to Bitcoin. It adds more value to Bitcoin, and adds more security to people who are needing to custodian funds on exchanges.
Yeah, well, absolutely. I hope it's a success as well, because as you say, if it is, everything is just adding on top of the whole blockchain, Bitcoin, whole ecosystem. So yeah, I hope it's a success as well. And I guess we'll just wrap it up there. I just say thank you again for taking the time to come in here and explain to all of us everything about Liquid.
Yeah, appreciate it. Take care, everyone.
Thank you, everyone. All right, Mayvoon will cut the stream now, or somebody will, and cut it and crop it and upload it and all that kind of stuff. Great talk, very informative. I like just bum bum bum. People don't have a lot of time, do they? They don't want a lot of chit chat and waffling. They want to just get straight through, down to the info. Give me the facts, give me the data. I've got to download this into my brain.
Yeah, good flow. I liked it. Good job.
Yep, thank you, Flipper.
Right, I'm gonna go and have some dinner.
It's not worth it though.